Hey traders, happy weekend to everyone. I'm so excited about this market. Are you excited? I just love trading these markets because that doesn't matter if the market's going to go up or go down, right? We can trade it both ways. And the most important part of trading is just not being so dogmatic one way. And today I'm going to be sharing with you some things about the interest rates the interest rates are about to tank. And the thing is that I'm like, which one's going to happen? Capitulation or the interest rates, or maybe both? Let me show what I'm talking about here. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so let me show you a few things here. Now, I've actually just what you're looking at right now is the TLT, and I'm just doing some TA on the charts. Oh, by the way, guys. Very first thing in the description, or Johns, JOHNS, freegift.com. Go get that free trading course I recently recorded just a few weeks ago. There's 5 phases in there that's going to really help you. From the first phase is what's actually stopping you from moving forward. What are the biggest mistakes you're making? If you're actually not getting ahead, you need to get the foundations right. So that's the very first thing you're going to get access to. Plus a whole bunch of my trading system and chart reading strategies, and just go get access, all right? I promise you, just even if you don't buy anything from me, right, I promise you that free trading course will help you out. Go get it. So we're looking at TLT here. I was just doing this is what I was looking at just recently. Like a TTD, shoulder, shoulder. Yeah, got the head up here, from there to there, and then we've got that down there. So, and we've got a little bit of support here, so we get a bouncy at that major support level, and we're going right down through there, right? Maybe. So let's go have a look. Let's go have a look at what I was talking about with the interest rates. So look at this. So there's a few things I have been focusing on with the interest rates the last sort of maybe a couple of weeks now. The first big thing about the interest rate, looking at the 10-year here, okay? The very first thing that I want to share with you is this. There you go. There's this good grammar. This good grammar. All right. So firstly, the market is like a rubber band, okay? And the purpose of this video is I'm trying to present to you 2 things. The market has been getting hammered, and one of those things has been interest rates have been going up so high, right? Tightening, right? The 10-year, the 30-year, the 2-year, the Fed, right? All that sort of stuff. So that's all happening. But what happens if what happens if the interest rates start to pull back hard? Which to me, it looks like they're actually going to do that. Are we at an inflection point? See, so now I'm on 2 sides of the coin, right? Because I also believe, as I did a video yesterday, I also believe that maybe to end this bear market this bear market or this downward phase is a capitulation. Now, maybe we don't get capitulation. But capitulation simply means like a big down day, right? Not like a 3 or 4 or 5%. We're talking like limit. Limit is 7%. What that simply means is when it goes down 7%, circuit breakers kick in and they shut it down for a little bit. They open it back up. If it keeps going down, they shut it down again. I think it's 2 or 3 times, and then they turn it off for the whole day. So limit. That's what I'm expecting to see this whole thing get washed out. And then that's the major turning point here, right? So that's the first side. But hang on a minute. Now I'm looking at saying, okay, which way is it going to, maybe we're not going to get capitulation. Maybe what we're seeing right now has been the capitulation. It's just been a slow grind down, right? Maybe we're not going to get that. Because, everything seems to be pretty good with the economy, I guess, right? Apart from inflation. But people are still flush with cash. There's still lots of money out there. So then when I'm looking at that, but then I'm looking at my interest rates here, I'm like, hang on a minute, but if the market's been getting crushed by the actual interest rates itself, right? Yes, we've got inflation. By the way, guys, inflation's not going to stay high forever, right? Nothing just goes straight up. All right, look it through, just take your emotional cap out and stop, it doesn't matter what you listen to or what you go through or what you understand. Everything in life just doesn't go straight up, right? There's a period of time. If you have a big spike up, men, you know what I'm talking about in the bedroom, right? You know what happens at the end. What happens after the end, right? You want to go to sleep, right? That's exactly what happens. So you go through the big hoo-ah, right? And then you're like, oh, and then you crash. That's exactly the way the markets work, right? Same with the interest rates. We're getting a very, very, very big spike up. Guess what? We're probably likely to get some sort of a cooling off phase. So then the rubber band effect. So we're looking at this here right now, and as you can see, firstly, the big thing I'm looking at with the interest rates, we're looking at the weekly charts here, okay? Very big overstretch. And I've been saying this for the last couple of weeks. I'm expecting this market to have a bit of a pullback. Firstly, overstretch. Secondly, we're now at this resistance level, and we're actually starting to get the pullback. But once I dig a bit deeper, I go to the daily charts and the 4-hour charts and so on and so forth. Look what's actually happening now. Do you see what I see? Do you see what I see? Right? Look at this here. And if you watch my last few interest rate update videos, this is the pattern that I drew here. But what is this, really? Let me take everything off the screen here. Really, what is this? Oh, it's a what? Say it with me. It's porcupine. Head and shoulder formation. It actually looks like a bit of a porcupine, doesn't it? It's like, right? Head and shoulder formation, there's a projection, so on and so forth, right? So actually, if we do the neckline, because the neckline, whenever you're looking at this, there's a couple of different sort of head and shoulder formations, right? So if we have a look at this here, remember that line up there was that major weekly resistance. But you also can see, let me take that off the screen here, because this was when I did my last update, I said if we actually fail right here, let's do that again. Get my little arrow right there. If we fail right there, guess what? We're probably likely to come down. We did. We actually broke down. Look what's happening now. We've rejected now, and we're starting to come down. We're starting a downward phase. Now, here's the thing. Where's the projection? So let me actually move that part from. So where's the projection? So the projection is from the head to the neckline. Now, where's the neckline? The neckline is wherever the shoulder is, and this is actually a big thing here. There's a few types of head and shoulders, right? We have the shoulder, right? So the neckline would be where? The neckline would be all through there, wouldn't it? Right? Because that's between the shoulder between the head is what we see through there. But if it's a leaning head and shoulder, right? So maybe we get a shoulder, head, and then a shoulder formation like that. Where's the neckline? Well, the neckline would be something. See how we connect what? We connect the two shoulders before the head. So the two shoulders before the head. And the same for this one right now. What do we have here? Like this. So what do we have? We just measure the two shoulders here before between, or actually apart, opposite side of the head, and then that's where the neckline is. So I hope you can understand. If you're ever looking at charts and you're looking at this, like that's not a head and shoulder formation. Sometimes you can get there's 3 different variations of the head and shoulder formation. So looking at that, then we just do the projection of where interest rates are likely to go. And let me bring this down to here. This is just a projection anyway, guys. So just a projection, right? And then we just do that through there to there. Now it's actually projecting. So it does look like on a short-term TA level, which get this, guys. Short-term TA says what? Short-term TA says that's where interest rates are going to go to. Probably. So the 10-year went from over 3% to down to 2.5%. Ooh, right? And it's probably going to go a lot deeper than that as well too, because if I start to look at some significant levels of support and resistance and all that sort of stuff as well, yeah, it's probably going to come down through maybe even down to that level there, right? We'll see this level through here. So we're possibly going to get down to, the 10-year looks like it's going to get down towards the mid-2s, right? And then we go do the 30-year chart, same sort of thing. What do we have here? Do you see what I see? See the leaning head and shoulder formation? Right, I'm pretty sure you see it, don't you? Let me just draw it for you, like that there. See, this is a very big leaning head and shoulder formation. And now look what's happening. We're starting to what? Fail. What does that mean? Well, it looks like we're about to head back down. We actually went to, that got the 3-3 on the 30-year, and now it looks like it's going to start to pull back through here as well too. So initially, it looks like that this is going to start to roll over, and the same thing this is actually now I'm looking at the 4-hour chart here, by the way, guys. This is actually the 2-year. So this is actually it's actually a lot different. It's not as clean, but we are getting what we call a round top on the 4-hour chart. A round top simply means you can see how it's just like like that through there, right? And then, so we should get to that. So, but looking at this here, there's a few things that's actually on my mind right now. Firstly, once, as I said before, I believe there's a capitulation coming in the stock market that's going to create the bottom before we see a big rally. That may not even happen. Why? Because we may see these interest rates pull back really hard soon, and because of that, it may create a bit of a floor in the stock market. But this is where it starts to get really dangerous, because if the Fed continues to raise interest rates, that's going to be the thing that inverts the yield curve. Let me show you what I'm talking about here. All right, so I've just brought up this website. I'm pretty sure it's going to give me a bit of a pop-up. There we go. Join the Warren Buffett group. Cool, for free. And then I can buy your shit. By the way, I do that as well too. You join my list, you're going to get my offers as well too. But anyway, but then guess what? As I said before, right? Here's the thing, right? I'm just being transparent about the other thing, bro, guys. It's the way it is, right? But remember I said before, right? Like that's also a dangerous thing what we're actually setting right up right now. Because if the Fed does keep raising the short end, this is what the Fed does. This is where the Fed, the Fed does right through there, right? This is what the Fed does. But up here, this is the free market. This is I don't give a damn what you're doing over here, little Feddy. I'm over here doing my thing, right? I'm over here. So here's the really interesting thing. This is where it's going to get dangerous. Not right now, but this is where it's going to get dangerous, right? This is the pre-warning to like, hang on a minute. Oh, it's going to be really interesting how this is going to play out, because guess what? When the market starts to, like, when you look at the 2000 crash, and then also the, the 1998 crash, what did the yield curve look like before, right? Let's actually go before the actual 2000. Let me go here, right? Let me see if I can get there. Right, see that through there. Look at this. So what do you get? You get the yield. See how the short end. This is the Fed. This is the Fed doing their thing, right? Over here, Fed go bro. So look at this here. So the short end, the Fed is actually raising. That actually is higher than what? Than the long end. The long end just simply means just like the long-term interest rates. That's what it means. Okay, just keep it simple. Short end simply means is what the Fed controls, and then you got the 2-year, and then the 10-year, and the 30-year. That's what the free market controls. Okay, but then you start to notice. Look at this here. It flattens out, and then you get that, and then you get what? The inverted yield curve is that this point through here is higher than all through this, and then that's when you start to get, that's when okay, March 2007, we're pretty much on the cusp of getting a pretty big market crash. But we haven't actually gotten that yet. Just even when we go back to the 2020 crash. Right, look at this here. Before we got that. There we go. Is that it there? There, look at that there, right? Look at that. This was 2000. We got the short end, the Fed, doing their thing, right? And then you got the long end down, right? The short term interest rate is up higher, the long term is down. So as I've been saying, if I go back to looking at this 10-year or even the 30-year, is that if the Fed does keep doing this to the short term, but then now we're starting to get a peaking of the 20-year and so on and so forth, which is going to cause that come down, then maybe, just maybe, we're going to start to get something like this on the overall, where this is the short term, what the Fed does, and now we're getting that through there, right? And now we're getting the big inversion, and we're going to get something like this, and then maybe that's going to be the case. So, but if I look at it right now, we're not getting that, but this is the really interesting thing that I'm really watching out for, the big thing I'm watching out for. We're getting that pullback right now. So maybe, just maybe, right? Maybe, just maybe, we're not gonna get that recession now. Maybe this is just a bit of a freak out before we continue up. That's always the question, right? So, but I'm always doing my analysis, okay, what's really going on here, and what the big levers that are actually pushing these markets around. So the big thing for me, guys, is I'm always going to keep watching the markets and what's going to happen, what the market is actually doing when it comes to the chart reading stuff. But the big things of what's coming down the road and where I should position myself, this is a big thing that I'm actually watching for in the market. So anyway, guys, leave a comment below. Let me know what you think. Do you think we are going to get the capitulation? Or do you think maybe because what's happening right now, the interest rate's going to drop, maybe that's going to create the fall in the stock market and we're going to see a big rise? So anyway, leave a comment below, guys, and I'll see you in the next video.